Kia ora and welcome to Deep Dives with Will and Reubs.
A show that is making accounting cool again.
I'm Will.
And I'm Reubs.
And today we are talking about metrics that matter.
That's right, metrics that matter. That's the segment where we look at the things we can measure in a business beyond the P&L, beyond the balance sheet.
That's right. So what's happening in the accounting industry these days is the processing of accounts, the debits and the credits and the data entry is becoming more and more automated, which we're seeing a transition from accountants doing the bookkeeping type work over to doing advisory type work. And part of doing that advisory is we need to know these metrics. We need to know what numbers we're looking at and what sorts of decisions we can make with the numbers we're looking at.
Exactly. So today, in metrics that matter, we're going to be looking at average landed cost.
Average landed costs.
Right, but before we get into that, I have a quote.
You've got a quote? Reubs, what's your quote, brother?
From last month's Sir David Goggins quote. This one's from Jocko Willink, who wrote Extreme Ownership. And he had this to say. He said, take ownership. Take extreme ownership. Don't make excuses. Don't blame any other person or any other thing. Get control of your ego. Don't hide your delicate pride from the truth. Take ownership of everything in your world, the good and the bad.
Excellent.
Which pretty much sums up the entire book. So, Extreme Ownership, if you haven't read it, is about extreme ownership. And we all think about ownership, but most of us tend to think about ownership of the things we can control. So, taking ownership of our actions and our feelings and our emotions, but taking extreme ownership is also looking upward and around you and taking extreme ownership of everything, even things outside of your realm and outside of your control. An example would be a lot of us, and well, what I really like about this quote and the book itself is that it's applicable to everybody at every level of every organisation everywhere, because it doesn't matter what level of the organisation you are, you can take extreme ownership for your part or your job or your role that you fulfill. And so that doesn't just mean taking ownership for your actions and the things you're responsible for, but also the things above you. So an example may be, you may be given a time frame and a task or an objective, right? And you may say to yourself, or most of us, prior to reading this book, I would have said to myself, in order to achieve this thing, that is not long enough. Or in order to achieve this result, that's not enough money. Or we need longer, or we need to do this thing first. And a lot of people just sit on the hand they've been dealt and they take ownership for their actions, but then they blame the result on somebody else, normally lack of funds, lack of times, lack of clear objectives. Taking extreme ownership is saying, if you don't have the funds to achieve what you need to achieve, you need to let the people know who control those funds what you need and provide them the evidence that will let them give you the funds. It is ultimately your responsibility to ensure that you have the resources you need to achieve your objective. If they haven't given you a clear enough objective, it is your responsibility to ask the questions required to achieve that answer so that you know what you're going to achieve. If you haven't been given long enough to achieve something, you need to be communicating upward to the people that are telling you how long you have to achieve something, to say why you need longer or why it will take longer. So that's extreme ownership.
It's taking initiative, really, isn't it?
It is, yeah. So there is no room for excuses or blame when you have extreme ownership. You are ultimately responsible for the good and the bad, to the utmost extent.
Absolutely, that's really good. Because with taking extreme ownership, it's about, like, if you look at how that sort of applies to your life, can you give us any examples of how you've taken extreme ownership?
Well, here we are producing a podcast, right? I know very little about podcasting. However, when we knew what we wanted to achieve, and then I came to you, or we had a discussion around the kinds of timeframes that were going to be required, the kinds of end result we wanted, we tried to get somebody else to do this for us. That didn't really work, and I ended up taking extreme ownership around making sure we had the resources and the timeframes, and I had the person here sitting here, what we're going to be discussing, how long it's going to go for, how we're going to push it out to people, who's going to edit it, and all that sort of stuff. So, you can't delegate away that stuff.
That's right, exactly. Yeah, because, I mean, what's happened is I've been so busy in the last couple of weeks just purely writing code, and you've been managing basically everything outside of writing code in the business the last few weeks. And with the podcast, you said, look, let's carve a few days out. We're going to make some podcasts.
Yeah,
I said, that's great. I'll put the time aside, but that's your thing.
That's right. So that's the time. I said, here's how long I need from you. Here's what we're going to discuss. Here's the resources we need, the kit, the equipment, the channels, all that stuff. Yeah, and here we are making it happen.
Yeah, and extreme ownership isn't just that you have to do everything yourself.
That's right, spot on.
You just take ownership. You're going, right, well, I'm going to own this objective, and I'm going to pull the people and the resources I need to achieve this.
Another quote that you can live and die by. It's not my quote, it's one that I repeat quite often, but it's one that I hear fairly frequently, is that the dog with two owners dies. And Will says that, I don't know, weekly.
Once a week at least, I'll say that. When we've managed a lot of projects over the years, so we cut our teeth in the software space implementing software. So we do a number of other things these days, but we really got started out implementing project management or inventory management or accounting software for people. And what I often saw is you'll meet with a team and they'll go, right, well, Jenny's going to do this, and Sam's going to do this, and Derek's going to do that. And then what I'd always say to them is, the dog with two owners dies. And they'd look a little bit shocked.
Yeah.
But what that means is, if I don't have one person who takes responsibility, everyone just stands there pointing at each other.
That's right.
And nothing gets done. The amount of projects that we had fall over, for many years we had projects falling over because from their perspective, they were relying on the other person to do the work.
Absolutely, man.
And it's just, no matter what I do these days, I always make sure that if there's an objective, there's one person that owns.
And that's extreme ownership by you of that project, because you could have sat back and said, hey, well, the reason this project is late, or the reason you don't have a point of sale system yet, is because Derek is blaming so-and-so is blaming so-and-so. So you're one level above that and taking ownership for that project and making sure that you're applying it. You know, you're ensuring your customers are doing what they need to do.
Absolutely, yeah. It's by saying like, right, well, I'm taking ownership, extreme ownership of delivering this project. Therefore, I need to make sure that we have one person from your end who's going to take ownership of this project. And once we started implementing that the dog with two owners dies. That's when we started seeing all of our projects go smoothly.
Correct,
so there's a bit more to it than having one person, but certainly that was a massive turnaround for us in our business, making sure there's only one person at their end that has ownership.
Totally.
And I just like it, it's so cool. It's like either the dog doesn't get fed or the dog gets overfed. So it's always going to go bad. So anyway, that's a great quote. Thanks, Reubs. Thanks for bringing that one along.
Great. Let's get into our Jocko Willink Extreme Ownership. Go and check it out at your local bookstore, Amazon, whatever. Now we're here to talk about metrics that matter, and today's metric is average landed cost. What is average landed cost?
Average landed cost is the cost to land a product in your warehouse to get it ready for sale.
Perfect.
So,
couldn't have put it better myself.
So let's say, for example, we are importing glasses being drinking glasses, right? So if we're going to buy 1,000 of them for $10,000,
yes,
that's going to be $10 per unit, correct?
Yep, correct.
Now, it costs us $5,000 to freight these. It's very expensive freight, but maybe they're fragile. We're air freighting them.
Okay, yes.
The other side of the world, so we're air freighting them. So that's $5,000. So what we can now say is, right, well, it was $10 per unit, being 10,000 divided by 1,000 gives us $10.
Yep.
But then we've got $5,000 of freight. So it was actually $15,000 to land
1,000
units, which makes it $15 per unit. Therefore, our average landed cost is $15. Now, the reason we call it average landed cost, let me explain that, because that would be the landed cost for that product. Let's say that we buy 10,000 units, and it was
September,
yeah. And then so we bought these in, and they're $15 a unit. Now, let's say in maybe December that year, we go and buy another 10,000 units, and there were $17 landed.
That's right.
So what we're going to have now is an average landed cost of 16, because we've got 10,000 at 15, 10,000 at 17, so our average landed cost is 16.
Totally, and I'm selling them as I go, so it's actually, that's why the average is so important, is because I may have 12,000 on hand. So it's important that you understand the average landed unit cost. Yeah,
we might have got it. Let's say, for example, the supplier had an abundance of certain glass, and they're like, right, we're going to put a 50% discount on this one. So then we're going to buy a whole lot of them at $5, and we freight them all over. So now we're looking at $10 for an average landed cost. So what we need to do now is, we don't want to say, well, these ones are at this price and these ones are at this price. We want to average that out so we can look at what our profit margins are when it's spread out over all those products. Otherwise, you end up having. Ruben always talks about when we're looking at doing any sort of looking at any patterns in an organization. So when we're trying to graph anything, we want to see smooth lines. So we want to see, trends is the word I was looking for. When we're trying to identify trends, we want to see smooth lines. We don't want to see ridiculous spikes everywhere if we were to graph any trend. So that's why having an average landed cost is important. Otherwise, we're going to see, right, well, these products are at 10, these are at 17, these are at 15. They're all it's spiking around. But as we're bringing more in, it's going to start slowly moving our average landed cost. And we start seeing some nice smooth lines.
Yes, and so the reason average landed cost is so important is because if you're a wholesaler, importer, distributor, understanding your costs to bring those items in per unit is highly essential because you're dealing in lower margins, higher volumes of units. So understanding exactly what that glass costs you is essential.
Absolutely.
That's what average landed cost is.
Yeah.
So you've given it a scenario of how to calculate it as well. So what you did was you took the supplier cost and then you took all of the non-supplier costs, so the freight, the shipping company, the customs fees. You applied those as well and divide them by the number of units to arrive at an average landed cost or a landed cost per unit, right? But then you're also looking at that for the different orders that you're placing over time so that you can calculate your average landed cost over time.
Yeah, totally. And just a point on that with these associated costs, this is something that would catch a lot of people out, is when we are when we're looking at putting these costs onto the product, in New Zealand, we have GST on imports, and you may, wherever else in the world you are, you might have some form of tax associated with bringing those products into the country. And what's going to happen is, because the way it works in New Zealand anyway, is that GST on imports portion, because it's 100% GST, you can actually claim that back in your next GST return. So we don't actually look at assigning the GST onto the cost of the product.
Totally.
That's really important. So let's say we had take the example of our 10,000 units at $10,000, and then we have a $5,000 invoice from customs. 3,000 was for duties and freight and logistics,
services, landing fees, or whatever, unbundling, whatever they do at customs.
That's right. Yeah. And then there's a $2,000 line for it's called import GST on imports, which is a pure GST line. We don't assign that part to the cost of the product, because what's going to happen is we need to pay that GST on imports of $2,000, so we put it back through our GST return, and then we get refunded that GST.
Normally in the same period anyway.
In the same period.
It's, totally.
Exactly. So I just wanted to point out that when we're looking at assigning our costs to bring that product into our warehouse, that does not include GST on imports.
Totally. Yeah, they're really good. Another good thing that catches a lot of people out, or adds another layer of complexity, are currencies and exchange rates. So one of the reasons we average landed costs is because it's not just the supplier costs that are changing and the freight costs that are changing, but also the currencies we're transacting in. So the value of the US dollar, if it's $15 US or $10 US per glass, drinking glass, today, it won't be that tomorrow, because the value of that glass has changed based on the currency that I'm paying the supplier. So you need a method of averaging the purchases that you're making while applying all the non-supplier costs to those purchases. What kind of tools are people using out there to do this sort of thing?
So again, Unleashed, great tool.
Yeah.
I believe all the inventory apps do average landed costing.
Almost all of them. Yep.
Yeah. So being Sin7, TradeGecko,
Unleashed.
Deer, Unleashed.
Yep.
Yeah. So that's the great thing about using an app like the ones we've just suggested, is that's all automated. You don't need to worry about that. Where if you're using spreadsheets, this is again very, very manual. So
yeah, I see some pretty complex spreadsheets out there where people apply different rates. One of the common things we see is people applying, they're not unsure about what exchange rate to use. Do I use the date of the supplier invoice that I paid that's on the cup that I'm using, or use the date of the payment? Because I don't make the payment till much later, or sometimes you make it in advance. So which exchange rate do I use when I'm moving my average landed costs? Well, all of those problems and complexities are solved for you when you use a decent inventory management app.
Exactly. Yeah.
So if you have customers that are clients or customers, or you're in an industry that has a complex spreadsheet for managing or calculating your average landed cost per unit, perhaps have a look at those, because that the chances are that maintaining that spreadsheet is very difficult for you, and you could be better served by having a decent inventory management app that did it for you.
Totally.
So that's one metric that matters. Have we covered why it's important? Yeah, I guess we have, due to the margins and tracking margins and volumes, how to calculate it, and who it mainly applies to, which is pretty much anybody who deals with importing, distribution, and inventory.
That's right. Yeah, with why it matters, just to touch on that once more, is when your average landed costs increase across, let's say you might be ordering, let's just say weekly, and those are changing every week. And if we're averaging that, having the average landed cost, which again includes those freight charges and all the costs associated with bringing the product in, as the average landed costs increase, our margins reduce, and then we may go, right, well, we have a rule at our organisation that we sell everything above a 40% margin. As soon as that drops to 38, 37%, we can go, right, well, we need to look at lifting our price or negotiating with our freight supplier or our product supplier to bring us back up to that $40 margin, because we know $40 margin, our turnover is X. And if our margins drop down, we can't pay our rent, we can't pay our staff, we can't pay what we need to. So yeah, that's why it's important, is because your costing affects your margins, and your margins are what drives the growth of your business.
Absolutely, man. How does average landed cost compare to, say, your last cost, what you last paid for something?
Oh, it's a really good point. Yeah, so these are two different things. Average landed cost is, as we've said, it's looking at it's averaging out all the multiple purchases you've done. Your last cost is looking at what your most recent purchase was. So if your average landed cost is, say, $17 and your last cost is $20, you could go, oh, this is trending upwards.
Definitely.
So then you want to make sure that, then you can check the margins on that product and see how they've changed. And if you've got a bit of an upward trend, you can start planning and forecasting that you may need to look at negotiating with your suppliers or lifting your price.
Totally, or stocking less of that product or selling less of it because you don't make as much money on it.
Exactly.
Yeah. How does average landed costing compare to things like Fifo and Lifo? Like first in, first out, last in, first out, and other costing methods?
You tell me.
I'll tell you all about it. Okay, so the average landed cost is probably the most, one of the better inventory costing methods, but it's not our only inventory costing method. Other people will be familiar with first in, first out, where you sell your the oldest stock first, and so you apply just the cost. When you sell a unit, you look at the oldest unit, and that's the cost of that product. The downside with that is, in an industry or in a market where prices trend upwards, it artificially inflates your margins, and it looks like you're making more money than you actually are when prices are perhaps dropping and you're making less money per unit. So fast-moving consumer goods, not such a good method for that, because it makes it look artificially cheaper for you because you bought it ages ago, But it's meant to work well where people things are like expirable, because if you think about older stock, it's actually valued lower anyway, so it's got a lower value to me, so I've costed it lower, so my margins are higher. But it doesn't work for all industries. And last in, first out, I don't think it's even an accepted one anymore, but it's the opposite. It's basically you're selling the most recently purchased stuff first. That, thinking back to my accounting days now, was meant to work better for people that were in commodity-based industries where the value of goods fluctuated dramatically. I'm thinking like sand, grain, oil, these commodities that have like a market price somewhere. The most accurate method of costing your products is what you last paid for it, because it fluctuates all the time. Yeah, so average landed cost is probably the easiest to manage and the easiest to understand, because it doesn't jump around so much. But first in, first out, you might have heard last in, first out. Those are some alternatives.
Awesome, man. Yeah, great explanation. Thanks.
Choice. Okay, so is that all we need to cover on metrics that matter?
I think it is. Yeah, I think that sort of sums everything up.
All right, great. Well, hopefully you now have the tools if somebody starts talking to you about their average landed costs in their business or for their unit, or maybe you can walk into a business and ask what the average landed cost is for their cups.
Now you are an expert on it.
Exactly. All right, so we'll wrap that up there, and we'll see you next week in
Failures and Fuck-Ups.
Fuck-Ups and Failures.